Today marks day number 71 of the $1,000 account challenge, and I'm actually down on the day $225 or 1.86% of the total portfolio balance. I broke my rules, but I did so for a very specific reason, and I will explain why I did that. If you don't know, my name is Gates. I'm taking $1,000, and I'm day trading options to see how far we can grow this account. With it being a gap up day this morning, my thought process was that on gap up days, the ideal scenario is an opening dip that gets bought. Now, we don't get that here on Google. We actually get an opening rally that runs up to the trigger level at $158. I take the entry prior to the trigger level, but like I said, for a very specific reason. Opening dip that gets bought is the ideal scenario for a gap up day. We get an opening dip on SPY, and Google is running, right? So Google showing relative strength against what's happening on SPY. So my thinking was that SPY pulling back to the previous day's closing price, opening dip here that gets bought. If this were to get bought and run back up to the high of day, my entry, I think, on Google would have worked for the move back up. So here's what happened. Google, long idea above 158. I break the rules, right? We get a rally up showing relative strength, pull back, higher low, rally up, higher high, pull back, higher low. So I take my entry during this consolidation right here, kind of thinking maybe this does break out and run, right? And we can just go ahead and take our profits on this. But instead of us getting a breakout, we get a breakdown. And at this point, I made the decision to add to the trade rather than to cut the position. And my thinking was, again, just that this has created a low, a higher low, and then this would be your next higher low, and that dip would get bought up. But unfortunately, when we got a breakdown from this structure right here, I just made the decision to go ahead and cut the trade because I figured it at this time was not going to work for me. And I think I made the right choice because I would have wound up having to hold through all of this. And with my contracts expiring tomorrow, Theta really would have cut into my premium quite a bit. I don't even know if this rallied back up. It started to rally back up, but I doubt that I might be back to break even at this point, maybe, but I think I'm pretty sure I would still be down on the trade, even if I held all the way through. So my reasoning, again, for breaking the rules is because Google showing that relative strength early on in the morning against what SPY was doing, and then SPY gapping up this morning, having the opening dip back down to the previous day's close and really holding it as a point of support. I thought that this hold of support might show us higher highs, and this dip gets bought up, and then Google would run with it. And yeah, that's just not what happened here. So unfortunately, trying to take the little bit of extra risk here did not work out for me this time, and I took, I believe, the largest loss of the week, $225 loss. It is the largest loss of the week. So I started the week with $11,000 in the account. We are ending the week with $11,800, almost $900 in the account. So we profited about $900 this week on a week that was honestly pretty subpar when it comes to price action. So I just wanted to hop on here and explain the trade and explain to you why I made the decision that I made on Google to take the entry prior to the trigger level break, why I made the decision to break the rules. Again, just taking on a little extra risk here, and unfortunately did not play out this time. This was my one and only trade for the day. I was not a fan of the opening price action. If we were looking at the watch list, a lot of these stocks just kind of doing a whole lot of nothing. Opening consolidation, even on SPY, opening consolidation. So the morning price action, I wasn't a fan of it. And when I took that loss on Google, I was like, you know what? This just isn't really my type of day. We get a gap up day, and then it doesn't follow through. That's pretty annoying when we have, so, you know, we had the sell-off yesterday, right? Sell-off yesterday, gap down, that just consolidated. Then we get a gap up this morning that doesn't give us follow-through, that pulls right back pretty much it is a full retracement from that gap up. So this market just up, down, up, down, up, down. Hard to follow this price action right now, and capital preservation is just as much of a strategy as anything else. And that's really what I'm trying to implement here. The one and done type of trade. I know I took on a little bit more risk with it, but you know, with it not working out, there's no reason for me to take on additional risk and try to continue to trade from here. So we're just going to call it a day. We're actually going to call it a week here, and I will see you next week when we continue the $1,000 account challenge. If the video has helped you out, do me a favor, press that like button for me, as it's the best way to support me in this type of work that I do, and consider subscribing to the YouTube channel as well. I have a 10,000 subscriber goal for this year. We are almost there, and I can't make it there without you. It's free to do, and it's a great way to support me, and I would really, really, really appreciate if you just click subscribe for me. Thank you so much, and I will see you next week when we continue the challenge. Take care, enjoy your weekend, and cheers.